is time for another Mortgage Minute with Frank Napolitano from Mortgage Brokers Ottawa. He will answer some frequently asked questions about home financing and the housing market. And we do want to remind you that Mortgage Minute is for information purposes, and you should consult with your mortgage or financial advisor about your own needs. Good morning to you, Frank.
Good morning.
It's always great to have you in here answering some questions about mortgages, about financing, about real estate and homes, and about the Bank of Canada, what they're going to do tomorrow. Got this first question for you.
Okay.
The Bank of Canada will make another interest rate announcement tomorrow. What are we expecting, and is it time to consider locking in a variable rate mortgage? Frank?
Great question. Big announcement tomorrow morning. It's fully expected by all economists that the Bank of Canada is going to go back into a holding pattern like they did the previous announcement. So the inflation numbers came in last week a little lower. So they came down a little bit. We expect them to come down again in November, which means I think Bank of Canada is a good position to say we don't have to possibly we've done our last one a couple of months ago, and now we can go in a holding pattern for a little bit and hope that Canadians can get kind of caught back up because they're falling behind for sure.
Yeah, it is pretty devastating when you've got a variable and you're waiting to hear, is it going to be held or is it going to go up, and then the expenses go up.
Right. Expectations though are just rates to come down in 2024. So if you're sitting in a variable rate mortgage, you've gone through probably the worst periods.
Yeah, so many increases, right?
So I don't know that converting your variable to a fixed makes a lot of sense right now because you're at the peak. And if interest rates, if you've made it this far, locking in now would mean that you're now, not only have you been at the peak of variable, but now you're probably going to lock in at the peak of fixed rates. If you can, hold on and wait for some interest rates to come down before you convert it to a fixed mortgage.
Okay, Frank, we got another question for you. We finally secured full-time jobs and are looking to buy our first home in the next 2 years. Should we get pre-approved now? What benefits are out there if we're buying for the first time?
Well, getting pre-approved if you're 2 years away, not a bad idea to go through an application so that a mortgage broker, your bank can look at your credit check and give you some recommendations as to what you need to do to get prepared. So I don't ever think it's too early to do it. I think you can do it just to get an idea of what it looks like. Now, I suspect that interest rates will be significantly lower 2 years from now than where they are today. So your qualifying will change. So you may qualify for a lot less today and a lot more in a couple of years. So. But nonetheless, it's nice to go through the exercise so you understand what it's going to take to get pre-approved. As far as benefits, first-time home buyers, there's a first savings account, which you can contribute up to $8,000 per year for 5 years, $40,000. So I would definitely put money in there if I could. Any money that's in an RSP, you can take up to $35,000 out of your RSP and pay it back over equal installments over 15 years. So I would strongly suggest that as well. And then obviously there's a land transfer tax. If you buy a house in Ontario, you can get up to $4,000 land transfer tax rebate for your first home. So that's three pretty good starts anyway for your first home, especially how expensive they are.
Exactly. Okay, final question for you, Frank. Our bank has advised us that our approved mortgage lender will likely be out of business soon. The bank also says they charge application and commitment fees and have a whole bunch of added restrictions. But when I read our documentation, it seems straightforward. Should we be worried as the mortgage lender's rate is significantly better than what our bank has offered us?
I've been on both sides. So I was a bank specialist for many, many years. I worked at TD and Canada Trust for 21 years, including the last 8 years as a mortgage specialist. I can tell you that when you work at a bank, you get trained that their products are the best and everybody else's are secondary. And now being in the mortgage brokerage industry for the last 18 years, I can strongly say that being on both sides, a lot of the non-bank lenders are actually funded by the big banks. So I always get disappointed when a customer sends me an email saying my bank said this lender is going to be out of business, and what that bank person doesn't know is that bank is actually funding the mortgage behind the scenes. So they're not going to be out of business. A lot of these non-bank lenders have been around 30, 35, 40 years. So it's not like they just popped up. You get better rates, you get better prepayment privileges, you get better exit strategies should something happen, a separation, you lose your job and you have to sell your home. The exit strategies are much more consumer friendly than they are at the bank. So if a banker tells you that, it's probably they have no idea what's out there. So it's actually misinformation, which is disappointing.
Frank Napolitano from Mortgage Brokers Ottawa. It's always a pleasure to have you on. Thank you.
Always a pleasure to be here, and please continue to support local businesses and charities.